Good afternoon. Welcome back to the channel. Brian here with Stock Dads. Hope everyone is doing well. I am officially back from vacation. My wife and I enjoyed about 10 days in the sun and the beach, just soaking it all in. So I appreciate it. It was a very, very nice and welcoming vacation. But yeah, anyway, let's get into things. The market continues to push on higher despite new tariffs, Trump tweets, issues in the Middle East, you name it. Everything's just continued to be shaken off. Now, we do got ourselves some new tariffs to deal with, so we will want to see how futures open up and how the market digests this new round of tariffs. Trump sets the European Union and Mexico and Canada at 30%, citing trade imbalances and fentanyl. We are going to get some retaliatory tariffs off of that. And on top of that, we have ourselves a extremely busy week as far as the economic calendar goes. We are looking at inflation data where we get new CPI and PPI data. We're looking at CPI to come in at 0.3%. Now, if that comes in line or slightly cooler, brace yourselves for a new heated round of possible Trump tweets and more politicians screaming at Powell to resign because they are wanting rates to be cut. And yeah, you know what? The market is continuing to kind of, debate this issue, but, it still seems pretty clear that we are not going to be getting a rate cut for the July meeting. It's not until September until we get a possible rate cut. So be on the lookout for that, possibly a 50 basis point cut for September, but we will see, of course. But like I said, if this inflation data comes in light, do expect some more noise and more politicians screaming for Powell to resign. Of course, his term ends in 2026. And yeah, we'll see what to make of that as the data comes in. Like I said, that is going to be on Tuesday for CPI. PPI comes in on Wednesday. And then we kind of finish up the week with retail sales on Thursday. And then we get the University of Michigan consumer sentiment and inflation expectations on Friday. Now, with all that going on, we do have ourselves some earnings heating up this week. Financials coming in hot. We got Citigroup. We got, a slew of some interesting names. Morgan Stanley, a bunch of financial names. Goldman, Bank of America, you name it. U.S. Bank, financials just coming in hot. And then sprinkle in some interesting ones. We got TSM on Thursday before the bell. We also have Netflix, the first of the big boys to come in on Thursday after the bell as well. Yeah, some pretty good ones. So a lot of things to keep us busy. I'm not going to go into detail on these individually, so be sure to do your own due diligence as far as that goes, and just be aware that there's a lot of macroeconomic data as well as individual reporting going on this week. So without further ado, now that we got that covered, let's jump into some chart spies at all-time highs. Now, we have gone into a little bit of consolidation mode over the past few days. Nothing seems to be broken, of course. The market still seems to be resilient. We had a $12 billion dart pool print back here about 2 weeks ago, and since then we've rallied off of that. Moved about almost 4% since that dart pool print, and now we're just getting a little bit of digestion as we get into some of these more heavier news-driven events. But as far as things go, SPY's at all-time highs. Even when we look into some of these peripherals and see what's going on under the scene. If we look at the names that are above their daily simple 50 moving average, about 75% of stocks within the S&P 500 are trading above that 50 SMA. As far as the 200 goes, about 61% of the S&P 500 names are trading above their daily 200 simple moving average. So with all that being said, things are looking pretty good. Even when we look at the VIX is muted, still hanging out at 16. Nothing to be worried about. If we look at the HYG, we can see that this is the junk bond, corporate bond ETF. So this is kind of a gauge of, kind of getting a feel of how frothy the market is. If they're buying the junk, that's a good sign that, things are looking pretty frothy. This is still looking pretty healthy, looking pretty constructive. It has cooled down a little bit. And then again, if we confirm that, looking at the LQD, which is your investment grade bonds, this is like your top tier class. You can see that it's kind of, kind of tapered off a little bit. It's not moving higher with the rest of everything. That just kind of tells me that the bigger money is kind of staying off on the sideline for the time being. They're not being too aggressive with everything, especially when we confirm that with the HYG, we can see that things have just kind of tapered off a little bit. So maybe the smart money and the big boys are just kind of waiting things out, especially as we get into that inflation data and some of these heavier hitting earnings reports. But nonetheless, the SPY looks fantastic. The Qs also look really well, continuing to trading at all-time highs. Again, if you look at the smaller time frames, you can see that things have just kind of tapered off a little bit. I would suggest use your momentum indicators like the MACD or whatever momentum indicator of your choosing is. Look for that to curl back up in the direction of the primary trend, and that would be to the upside. So look for things to settle back in and push back towards the main flow of the trend. Now, if we start to see some weakness on maybe perhaps the 1 hour, sure, that could suggest that a deeper pullback is in the making, but as of right now, that is just not the case. So that's where I'm at as far as the main indices goes. If we look at small caps, IWM has had a nice little move. If we put in a 200 simple moving average, we can see that, let's see, I think it is that one, yeah. If we put in a 200 simple moving average, this red line here, we can see that the small caps have finally pushed back above their 200 simple moving average after being down below it for quite some time, lagging the rest of the main indices. So that's good to see that the small caps have finally called a bid, and we've seen some of that frothiness move on up. So IWM looks pretty good. Dow components look good as well, except unlike the SPY and the NASDAQ, the Dow has yet to reach all-time highs. So we'll see if we get some rotation into some of the Dow names as we move forward. But as it sits, here's the IYT, your transportation shares. Not quite there yet either. So that just kind of confirms that the Dow isn't ready for new all-time highs. But anyway, moving on. Let's look at some of the individual sectors here. Semiconductors continue to look pretty strong. You got NVIDIA at all-time highs. You got Broadcom at all-time highs. TSM has earnings reporting this week. Keep an eye on this one. MU, Micron, also looks pretty good. Needs to break above 127, 128 zone for a new leg higher. AMD also looks pretty impressive here. Just needs to crack above this 140, about 148 to 150 zone. You do have a nice little gap to fill up above towards 160. If AMD gets moving, that would be a nice little touch here. Let's see. Let's look at the XLY. The XLY finally waking up. Of course, I'm still in some Amazon calls, despite Bezos selling some shares, what seems to be, a lot. The stock has finally moved away from the 220 mark. It pushed up to about 227 on Friday. yeah, it's looking pretty good so far. No need to fight the trend here. Tesla, of course, there's a lot of news, a lot of political back and forth with Elon. So, yeah, this one's just kind of hard to trade right now. Really, for me, I don't love it until it gets back above 362. It's had some nice moves here and there, but nothing to write home about. Now, I will say we had this dark pool print of about $1 billion worth in shares back on this big red candle back in June when this whole thing started with Trump versus Elon situation. And that seems to be holding out pretty darn well. That seems to be a strong institutional level down at that 288 mark. So that's going to be continue to be my support until it breaks. Like I said, this has been acting really well over the past several weeks. So keep your eye on that 288 level, 270s if you want, another second level to kind of work with. This whole 288, 270 zone would be ideal for Tesla to hold. If we start to lose 270, yeah, it's going to be a short all the way through. Now, let's look at a few names that I am looking at for the week ahead. I'm keeping an eye on Vistra, ticker VST. Needs to clear the 200 psychological level there to push up towards about 220. I'm also keeping an eye on MSTR finally breaking out above 420. You have plenty of room to about 450 for your next price target. Bitcoin seems to be doing very well, hit above 119,000. So Bitcoin names, you're seeing a lot of frothiness in some of these meme coins. And as long as Bitcoin continues to rise, some of those meme coins are going to rise with it. So crypto looking pretty constructive. Also, another name that I'm looking at here within the semiconductor world is Western Digital. Continues to rise. We continue to see some dark pool prints throughout. So slow mover. So shares or options with plenty of time. Do not do short dated contracts with WDC. That's just, my experience. And also, in my experience with WDC, you want something that's deep in the money. Play that delta. But yeah, shares are also very, very good here. Looking at Futu, had a nice breakout of 130. Now, what I would like to see here on Futu is a retest of 130. I know that would seem pretty nasty, but you had this big breakout. You got good volume coming in. She does have an opportunity here to continue to rise to the upside, but what I would personally like to see is this thing to come back, maybe retest, give it a little smooch, and then push back on ahead just to confirm that. But yeah, the Futu is looking very good. Shake Shack holding on to that 130, 140 zone. Now you've had a good little move here off the lows, just some digestion here at resistance. I would like to see this thing continue to digest and then use this as a launch pad to push on ahead. So Shake Shack is on my watch list. We already talked about Amazon. Microsoft continues to look really, really solid. We had a 2 billion dark pool print right before I went on vacation, and this thing consolidated and pushed back into all-time highs. It's holding a very solid trend. You don't have earnings until later in the month, but Microsoft continues to look pretty darn impressive. Google's been kind of naughty, kind of tricky to trade. But look, it's at a nice little level here, squeezing. Needs to break above 181 to push up into about 186, possibly even to 190. Looks really good, though, at this moment in time. Now, if you ask me back here, when it dived back down to about 160s, yeah, it didn't look too hot. But now it's just kind of reset itself back up. Could be a nice little, situation here where we could possibly buy some debit spreads or credit spreads, depending on how you want to play this, or just long calls or shares. There's so many different ways to play this market. It's insane. Moving on to Dell. Dell has been pretty impressive also. You do have a big resistance level at 129. If you get through 129, there is a big gap to fill towards 140. No skin in the game here for me, but it is on watch. And then we've also talked about AMD. But all right, that's going to be it as far as what I'm watching for in the week. There's a lot of setups out there, guys. You know, you can run different scans, different bullish scans, and you're going to get a lot of hits. So be sure to pick the ones that you like the most, play off of those key levels based on your technical analysis. Keep in mind the macro environment with the main indices. You want those sales and the wind blowing in your favor. That makes trading a lot easier. And as of right now, yeah, the market's at all-time highs. We are in a little bit of a digestion period going into the week ahead. We get futures opening up at 6 p.m. We'll hopefully get some answers as far as, how, maybe some of these future players are watching these new tariffs. And yeah, we got inflation data this week, and we have lots of earnings on the table. So with that being said, my main thing it would be to possibly trade a little bit softer this week, especially with the data. You never know with inflation and Trump tweets, Trump versus Powell, etc. But if that momentum kicks back in on these smaller time frames to line up with the larger time frames, you're back in business. Like I said, the trend is your friend until it's not. And as of right now, the trend is still your friend. Nothing is really broken out there. So keep it up. Good job, longs. Great job, bulls, bears. Tough luck, man. Sorry. It is what it is. All right. Keep up the good work. Glad to be back. Let's kick it off and have ourselves a wonderful, wonderful week. And like I said, be good, trade smart, trade your rules, follow your rules. And hey, whatever happens, happens. Don't worry about the unknowns. Uncertainty is always going to be out there no matter what. The only things that we can control are our entries, our exits, following our rules. And that's it. Whatever happens, happens after we put our chips on the table. Stick to your stop losses, stick to your guns, and play your odds. Hey, my name's Brian. Welcome back. Have a good one. Happy trading. Bye.